The U.S. dollar is eyeing a fresh low for the year as soft economic data and dovish comments from Federal Reserve officials suggest the central bank may be on the verge of slowing the pace of its rate hikes. The Bloomberg Dollar Spot Index dropped as much as 0.3% on Monday, with the euro among the biggest group of 10 gainers as the gauge of the greenback neared its lowest since April last year. Europe's common currency climbed as much as 0.7% to $1.0927 ahead of a swath of European Central Bank comments on Monday, including President Christine Lagarde. And moving from there, in more currency news, the euro scaled a 9-month high on the dollar on Monday as more hawkish comments on European interest rates contrasted with market pricing for a less aggressive Federal Reserve. The euro reached as far as $1.09, breaking the recent peak of $1.08 and opening the way to spike top from last April at 1.093. It was aided by European Central Bank's Governing Council member Klaus Knot, who said interest rates would rise by 50 basis points in both February and March and continue climbing in the months ahead. British and Irish trade union Unite Union says the UK steel industry, which supports thousands of jobs, is on the edge of collapse. To avert the impending crisis, the union has written to Business Secretary Grant Shapps seeking an urgent meeting to push for more support. Unite accuses the government of taking little meaningful action to help the industry, leaving the sector at breaking point. In the letter, Steve Turner, Unite's Assistant General Secretary, said there were a number of issues causing the industry's problem, including crippling energy costs, carbon taxes, lost markets, lower demand, and open market access for imported steel. Oil steadied as investors assess the outlook for rising demand in the wake of China's reopening, the U.S. dollar easing, and risk to Russian energy supplies that came into sharper focus with fresh curbs looming. WTI held above $81 a barrel following 2 weekly gains that drove the U.S. benchmark to the highest close since mid-November. While a weaker U.S. currency supported crude prices on Monday, trading volumes in Asian hours were held back with national holidays to mark the Lunar New Year in many key markets, including China and Singapore. Japanese government bond yields sank to 1-month lows on Monday as the Bank of Japan used its updated lending facility to add $1 trillion in funds to the market. The 10-year JGB yield sank to 0.37% this morning, bringing it close to last Wednesday's low of 0.36% when the bank defied pressure from bond bears and kept stimulus settings unchanged. And very finally and quickly for you, cryptocurrencies have remained flat over the last 24 hours, although traders may back away from riskier assets this week. Bitcoin was down 1% to $22,670. Although over the weekend, the largest digital coin by market capitalization peaked at over 23,000, a 3-month high. Ethereum was up marginally, gaining 0.18% to 1,631, although it reached its own 3-month high on Saturday, hitting $1,659. And those are international business headlines for you. When we come back after this break, South Africa's Competition Commission goes after insurers for price fixing, saying it's been going on for more than 30 years. We'll have the details after this. More information has come to light since last year's raid on insurance firms in South Africa. In August 2022, the country's Competition Commission announced that it was raiding and investigating 8 of the country's biggest insurers for collusion to fix prices and trading conditions in the country. The suspected collusion is in respect of fees for investment products such as retirement annuity and premiums for risk-related products, mainly life insurance cover for dread disease, disability, and life and funeral assistance benefits. The Competition Commission said the sharing of this information allowed the insurance companies to adjust their prices of their premiums if needed and to align their prices of new products after comparing it to the prices of their competitors. They also allegedly shared information about each other's products, affecting the design and reviews of each company's products. While the hearings for the investigation are still some way off and information from last year's raid at the various insurers was still being analyzed, the Competition Tribunal has the power to fine companies up to 25% of their turnover for repeat offenders. Joining me now is Matodzi Ratshimbilani, Managing Director at MVR Attorneys, and he's joining me from South Africa as we look into this story now. Welcome to the show. Thank you so much for joining me, Matodzi.
Thank you for having me, and good morning.
So we've been following this story since the early morning raids last year, which it's been a while since the Competition Commission has done something like that. But in terms of South African law, if these companies did indeed share this kind of data and colluded among themselves, what kind of law would they have broken? What crime particularly would they be guilty of?
So look, the position in our law is that the Competitions Act governs anything related to anti-competitive behavior. The essence of it really is that in the market it seeks to prevent excessive competition and including prohibiting avoidance of abuse of dominance, cartel formations, this is one of the conducts. So in other words, as a player in the market, you are prohibited from colluding with one another to the disadvantage of the customers that you serve.
And that's my next question now. So what it's looking like is that there's been some kind of cartel allegedly operating for some 30 plus years in South Africa's insurance industry with many of the big players. But in terms of disadvantaging the consumer, how would this sort of collusion that is alleged to have happened have hurt the South African consumer?
So look, as I said, the essence of the Competition Act is to prevent or lessen the conduct that lessen competition. Now, if South Africa has quite a mature, financial services market, and it's not uncommon that if an ordinary consumer is looking for a product, whether it's short-term or long-term, you have the option to shop around, but that ability and the freedom to shop around for the best value suited for your needs is being prevented because the big players, as is alleged, are colluding on pricing and how they structure their products. So in the end, the consumer is the one that suffers because you end up paying possibly a lot higher than what you would have paid if the players were competing fairly.
The issue with the customers, in terms of this, we know what the fine could be, and the fine is not a final judgment, that's just a fine in line with the case. But what about the customers who may have fallen victim to this price fixing? What kind of recourse do they have? Are they able to file a claim or a case against the insurance if at the end of the day the tribunal does find that they were guilty of colluding? What kind of case would it be? How does the consumer possibly get justice in this situation?
Look, we currently do not have any cases where consumers have successfully sought damages after the findings of cartel conduct. Not to say it can't be done, but it will be quite a novelty if it were to happen. What tends to happen is that, for all their misdeeds, the market players pay a fine into the state, which helps to prop up the competition authorities and to make sure that such conduct does not happen in the future. So as for individual customers trying to get some redress, it's near impossible, because it would be quite hard to be able to ascertain what you would have received, what deal you would have received as a customer. But not to say that it can be done. It's just it's a tall order, and it's unlikely to be the case. The best we get is that the market will be leveled, and one knows that when you are to purchase products in the future, at least you're doing so in a system that's fair.
Okay, so this is of course an ongoing investigation, and the Competition Commission stated that the matter is still being looked at. What do we expect to be the next steps? How long do you think this really will take? So we know the tribunal can of course put that fine in place, but there are a number of things that remain. 8 insurers were raided then, and it might actually even bleed into smaller firms as well. What do you think is going to happen next?
Look, I mean, the matter is at a preliminary stage. It's still undergoing investigation, so it can still be a while until we reach the end of this. The insurance companies, like all big market players, they are well resourced. They are likely to challenge, the process. If they believe that the process was not fair, they may raise procedural issues. So it's not inconceivable that we may have this ultimately resolved in the next few years to come.
Biggest takeaways is that the Competition Commission says this has likely been going on for 34 years, if not more. How do you think it could have been going on for so long without coming to authorities' notice?
Look, I think these are the names that are listed there, that have been raided. These are big players. These are well-known brands with a lot of equity. So a typical customer like you and I, if we go look for a product, you go to 1, to 2, to 3, the price is more or less the same. You typically will take whatever you're looking for, and then you move on with your life. Insurance is not the sort of thing that one purchases every day. So I believe that it's probably just a question of lack of, consumer activism. It's interesting that when the dawn raids were announced last year, here in Johannesburg, where I am, amongst most of the top talk radios, there were quite a number of people who called in, former employees of this insurance company, some of them confirming that this is indeed the practice. It's been going on for years, and in their industry, some believe that it's an acceptable practice, and some actually expressed surprise that the authorities are only picking up on this.
That's interesting. I'll ask you about collusion around South Africa before we wrap up. But the combined turnovers of these companies easily run into many tens of billions of rand. And the Competition Tribunal, as I said earlier, could fine them up to 25% of their turnover, which would make the penalties the highest ever fined in South Africa's competition authority history. But they also knew this when they were colluding. And so many wonder if that is even enough deterrent, particularly for large companies like the ones allegedly involved in this collusion and this cartelish behavior. So do you think the fine is really enough of a deterrent, or is it time for South Africa's competition authorities and council and commission to start thinking of new ways to ensure anti-competitive behavior that hurts the consumer is absolutely dealt with, or it's deterred in the long run?
Look, I mean, in the first instance, the applicable penalty is a maximum of 10% for first-time offenders. The 25% only applies to, repeat offenders. As far as I'm aware, there's not been any fines in the space, so all the players are likely to be, within the 10% range, and the 10% is in fact a maximum. It may be that they argue for lesser amounts, but you are correct. This is a multi-billion industry. It's quite likely that whatever fine is to be levied against these players, may obviously, depending on their size and their profitability, may not be that significant. But I suppose because it's percentage based, 10% in anyone's pocket, it's a big amount. So I think they do feel the pain, and it should serve as a deterrent of sorts, for future conduct.
Okay, Matodzi, before I let you go, let me widen this a little bit. So investigations on collusion in the financial services industry in South Africa, unfortunately, are not rare. The Commission previously brought a case against 17 local and international financial institutions for collusion in the foreign currency markets. The Commission sought for the banks to pay an administrative penalty equal to 10% of their annual turnover. There's also been collusion in the bread and construction industries. So when you look at, unfortunately, how, I guess we might say, rife or common this sort of collusion is, what do you think that tells us about anti-competitive behavior, the protection of consumers in South Africa, and even about competition issues in the country as well?
Look, I mean, it shows that this conduct is endemic. These companies, in particular, the banks and the insurance industries, they've been operating in this country for decades. And the current Competition Act that's currently in place was promulgated in 1989, replacing the one before that, which wasn't very effective. So I think over the years, the competition authorities in this country have strengthened their position. You mentioned the bread cartel, the construction industry. Everyone still remembers that, and I think it's slowly building up and gaining momentum. So my humble view is that having gone for an industry as impactful as the insurance industry, it will slowly strengthen the position of the competition authority in the country.
All right, Matodzi, thank you so much for joining me. It's a story we've been following since last year, and we'll continue to follow it to its conclusion. Thank you.
Thank you.
And 8 of the biggest insurance companies in South Africa, which means millions, if not billions of rand in profits and turnover, and possibly millions of consumers also being affected in this case that the Competition Commission seems to be bringing against those companies. Allegations of collusion stretching as far back as 34 years. Just imagine how many consumers have somehow had their choices narrowed or even choices in a way made for them because these companies decided to be in on it, being anti-competitive, antitrust in their dealings in the market. We'll follow this very closely to the end and see if South Africa can get a handle on some of the competition issues it's facing. And that's it on this episode of Business Edge. Don't forget to follow us on social media. We are at News Central TV. You can head to our website, www.newscentral.africa, and also download our mobile app on Play Store and App Store. 12 p.m. West African time, News Central Now comes to you live from our studios in Lagos, Nigeria, with the latest from here on the continent and, of course, around the world. I'm Tolulope Adeleru-Balogun. I'll see you again soon.